let me show you some practical ways to use this. If we look at ZB, ZN, and I'm going to take off this bottom one. Let's only look at the last 10 days. So what I did is I'm just looking at these things for this week. 5-year, 10-year, 30-year. How they're just moving this week relative to one another. And we have PDFs and just explanations for how to do all this stuff. So this is really cool. And this is going to get a little advanced, but I want to show you this because there are so many different trades that people just do, and it is what it is. There's not more. There's nothing there. The point about this trade is you can really dive deep into the bond trade. When I was with that bond firm, it was based on everyone doing this exact same trade. So it looks a little bit more convoluted, right? It definitely looks a little bit more intimidating now. But remember, these 3 lines are just ZB, ZN, and ZF. These lines here, these lines, guys, are the volatility levels of the future of the options on the futures. It's the at the money straddle, it's the at the money implied volatility. So right now, ZB, and this is only a week, we can do it for a month, we can do it for a quarter, we can do it for a year, is getting to the outside of its implied volatility range. Okay, so the first time, and this was earlier in the week, it trades up there, it fell off. Today, it's trying so hard. I mean, the Dow is down 1,000 points, and it's still having trouble getting here. If the market bounces tomorrow, these are all going to come down. If we crash tomorrow, these aren't going to hold. But it's just a really, really cool way of looking at how volatility acts as support and resistance. Here's another chart I made before we got together. How are you guys doing out there? Is this making sense? On a scale of 1 to 5, it's 5 being I understand everything you're saying, and 1 being you're speaking a different language. Where are you at right now? 1 to 5. Talk to me. I was thinking I was going to get 1s and 2s, but I see lots of 3s and 4s. Oh my God, that makes me so happy. All right, well, I'm going to keep going then. Well, all you guys that are at 2, I got you. It's the same thing over and over and over again. This time I'll use the spreadsheet. Okay? BUB, ZB against UB. 10-year, 30-year, 30-year plus. The BUB is ZB UB. Okay? ZB UB, BUB, right? BUB, ZB UB. The null is the white, and the knob is the light blue. The null, it's the difference between 10-year and 30-year plus. So it's ZN against UB. Comprised within the null are 2 things, the knob and the BUB. So the white line is right in the middle. But look at the knob and look at the BUB. This major disconnect is going like this. Offered, the null is trying, but the BUB is, I ain't going down there, I'm going up here. But what I want you to understand is they're a part of one another. So they have to move together to some degree. They might stay where they're at, but they're going to go like that. If the BUB continues to do this on its own, and this continues to do this, what's going on between 18 years and 30 years, there's a completely different interest rate. It just couldn't happen. Like, it doesn't make sense. It's part of it. So eventually, they're all moving together. And this is how professionals trade bonds. They don't just speculate. They don't just guess on direction. They trade these things together. And this tool makes it super simple, because you know what? ZB. If I want to look at the ZB against the ZN and UB, which is a butterfly, in the past, I would have to build a chart, but now Let me see how the ZB butterfly looks on this puppy. Boom, boom, yes, apply, okay, done. ZB fly is way up here since the beginning of the year. So this is bond edge. Guys, we have this exact same tool for equities, and energies have been released. We're also building it for metals and for commodities. Rank, 99%. What does that mean? Well, Pablo added these ranks, and it took me a little bit of time to get them, but now I use them all the time. ZB fly, going back to the beginning of the chart, which is called the beginning of this cycle, is trading at its 99.59% level. So from the beginning of the year, the ZB fly is the highest that it's ever been. The ZN fly, it's 38% of its highest, and the ZF fly is only 4% of its highest. So look how inexpensive the ZF fly is compared to the ZB fly. Does that make sense, that percentile rank, guys? This reminds me of the same exact situation I was in 2004. 2004, I joined the bond firm that I was with. I was the 6th employee. I was the youngest one there. I already kind of, I was trading for 5 years. I made some money. I was feeling good about where I was. And when I joined this bond firm, the owner was working on new technology, but everyone else in the office wasn't embracing the new technology because they were already successful trading bonds. They didn't want to change their game. I came in, I didn't know how to trade bonds. So he gave me this tool and he said, this is how we trade bonds. And I started using it and I started making a bunch of money. And I started, but I didn't feel like the other older guys had a lot of respect for me because I was using this new tool. And they were saying, oh, it was the tool doing all the work. And me, naturally, I'm like, well, that's not true. I'm a good trader. And so I wanted to go backwards. But the owner of the firm said, are you crazy? How can you not move forward? Everything you do, you have to keep moving forward and forward. That's where the edge is. So I move forward. And I see the same thing happening right now. Look at this. Bonds are the most powerful market in the world. Okay? We talked about correlations, right? When do the correlations break down? Correlations, correlations, correlations. These are 3 butterflies. When did it break down? Right here, right? Right here. That's this day. That's this day, guys. That's when volatility really came in the market, like we haven't seen in a long, long time. By following these bond flies, as soon as you see them start to act up like that, that was a heck of a tell that the world was going to start going nutso.